Hey guys, welcome back to another update on gold futures. From the prior video, we had predicted the price of gold to hit around 2041 before ultimately making its way down to the low 1990s. In fact, as the day went on, I predicted the resistance zone was actually going to be this 50% retracement because the point of confluence with this downward hourly trend line looked more likely than the 61.8%, just based on where the hourly price was trading at. However, neither were correct, and it actually ended up coming up against this 38.2% retracement as resistance before ultimately making its way down, which isn't completely uncommon, but typically it's usually the 61.8 or the 50% retracement is where we see price action meet before it becomes resistance. But either way, it did bounce off the 38.2 and almost made its way to the 23.6% price target of 1992.2. Didn't quite get there, but was almost close. So these are really judgment calls you have to make on the shorter time frames and assess where the price action is looking like at any given time. But either way, it's time to assess where I think gold is heading now. And my bias is towards a bullish case, so let me get rid of this Fibonacci retracement since I think this move is done and it's time to start fresh. And let me switch over to a 180-day 4-hour chart. So immediately I see we made a bounce here and here. So it's all about trying to figure out where these bounces correlate with the proper Fibonacci retracement. So let me draw one from this low right here to this all-time high. And you can see, although this candlestick broke the 61.8% retracement, it ultimately closed green above it, which is what you want to see for a bullish case scenario. Additionally, to further validate this as its true support, this candlestick came back to retest it, and like the prior candlestick, closed above it. And lastly, we have this candlestick, which once again bounced off the 61.8% retracement to a T. So it's clearly a validated level of support, which is why I'm bullish for now. And right now, the current candlestick is bouncing off this 50% retracement. Furthermore, the price action did break out of this trend line we drew from earlier on the hourly chart. So if all goes according to plan, I do have this 2086 price area as the new price target, which is the 23.6 retracement. The bearish case scenario would be if we draw a Fibonacci from this high to this low and the price action comes up against the 61.8, 50% retracement, or even this 38.2 retracement like it currently has, and then it breaks below the bullish 61.8% support. Then I could see this 1976 area as a bearish price target. But for now, I'm going to stick with the bullish case. I will say, if we switch over to the daily chart, it doesn't look too bullish, especially if you account for this big drop. However, if we switch over to the weekly chart, you can see the current candlestick is still green, and we did get this big push up with volume on this candlestick, or similar to this candlestick back in March, and we can reach this 23.6 price target, which would almost coincide with this 2.0 standard deviation channel. But anyways, that'll do it for this video, guys. I hope you enjoyed this content. If you did, please hit the like button and consider subscribing to this channel. Leave any questions in the comments down below. Until next time, good luck in the markets. Peace.